Why don't we kick things off with Fitbit? This is a company that has desperately needed some good news, and it seems like they finally got it with this new report.
It was a pretty strong release, in my opinion. I mean, revenue was up about 393 million, which beat its own forecast as well as analyst expectations. The big news, I think, here is that they became profitable again because they've been losing money for, I want to say, about 2 years, as people have been really shifting away from these basic fitness trackers towards more full-featured smartwatches. And the big challenge has always been, can they, transition from trackers to smartwatches successfully? And of course, they still sell trackers. Those are really popular in the Middle East and Africa and some of those emerging markets. But in the US, I mean, it's really all about smartwatches these days. So they were able to post adjusted net income of $10 million or 4 cents per share. So, getting back in the black.
Worth noting that on a GAAP basis, they did lose money. So we got to emphasize that adjusted income there. And exploring that outperformance a little bit, it seems like the company is seeing success with the smartwatch line. And that was really kind of the big looming question for them, is with the kind of more simplified fitness trackers out there, and that market being a little bit tougher with some competitors like Xiaomi in the mix, can they go to the smartwatch market and make a big splash? It seems like the answer is yes.
Right, especially after their first smartwatch, the Ionic, really just flopped. I mean, that thing did not sell well. It didn't really look that appealing from like a mainstream perspective. They consider it more of like a niche performance type positioning, whereas the Versa is very clearly resonating much better with consumers. And if you remember, they've spent years acquiring different little companies to help them build their smartwatch strategy, and now we're seeing the kind of result of that. And they sold about 3.5 million devices during the quarter. Average selling prices were up a little bit to 108. As the product mix continues to shift towards smartwatches, which are now about half of revenue. So I do think they're making some really impressive progress here.
And you look at the overall market share. A year ago, they had 0% market share in smartwatches. Flash forward now, they are one of the major players. They are in second place in this market. So not only are the financial results looking good, in the competitive landscape, they are not only holding their own, they're taking market share from other players.
Right, exactly. Since Ionic launched like in Q4 of last year, so a year ago, they really didn't have anything. And now we fast forward to today, and Android Wear, or Wear OS, which used to be Android Wear, has really just done so terribly, and no one's really buying those devices. So Google has really kind of failed on execution in terms of like really getting into the wearable. So I think that's really given Fitbit this opportunity to step up and really, fill that need and provide some type of alternative to Apple Watch, because Apple Watch is still the dominant smartwatch in the world right now. But people want competition, people want alternatives, and Fitbit is really offering something else.
Outside of the financials, I think looking at some of the user activity, there are a lot of really encouraging signs there. A lot of the activations that they're seeing over this quarter are from new users, and it seems like engagement with folks that had been users at some point and then fallen off is starting to get revitalized a little bit.
Right, because that's always been a big problem with these basic fitness trackers. Just like kind of like when people start going to the gym, and then you get kind of lazy, and then you just stop going. And it's kind of the same thing. Like people would buy these fitness trackers, use them for a couple months, and then just stop using them because let's face it, we're all lazy. And the big challenge has always been for Fitbit: how do we keep these users engaged? How do we really motivate them to stay active and improve their lives and health? So they are starting to make some progress there, because they did say that out of the existing users that had bought new Fitbits this quarter, about half of them had previously been inactive. So they are starting to get more people back on the platform that had previously been dormant.
After years or quarters of declines on the revenue side, the market was very happy to see some revenue growth, even if it was pretty meager. How are you feeling about this company? It's up like 35% since this earnings release. Does anything that you see in here change your outlook on this business?
I mean, I do think it was a very strong report, and I do think they were making a lot of progress with this turnaround, because they had been kind of on the ropes for a while with these fitness trackers. But at the same time, I don't think they're out of the woods yet. I mean, this is going to be a long game. I mean, we're talking about smartwatch platforms, and any platform strategy is by default a very long-term strategy. So, they're making progress, but they still have to keep going. I mean, they're also in consumer hardware. It's notoriously difficult. You got to constantly innovate. You got to constantly put out new products that people like. You got to build your platform. You got to get more app developers on there. You got to, there's just so many pieces to really kind of do well and maintain over time. And you're competing against literally the richest company in the world. So it's going to be tough, but I mean, I'm still pretty, that being said, I'm impressed that they've been able to do as well as they have over the past couple of years with really transitioning to smartwatches that people want to buy.
Yeah, for me, I think, they're guiding for what is essentially a slight decline in revenue next quarter after being basically flat year over year this most recent quarter. So it's not like the hardware segment is showing blistering growth. It's a nice return, and it's a show of strength in some key categories for them. But hardware is still this business. It's all of their revenue. That hasn't changed. And I think what makes a hardware company really compelling is if they can create a really viable platform. And I don't see that yet with this company. I think there's so much potential for it. But unless I start seeing the signs and I start seeing some money coming in on the software side for them, I'm going to remain a skeptic. And I think I can just find better places to put my money, honestly.
No, I totally agree with you, because I mean, they've been talking about this idea of building up this services business for a long time, and they're still trying, and they want to get into more corporate wellness programs, but these are still like less than 1% of revenue. So, I mean, again, when it comes to building a platform, you want to kind of get away from relying totally on hardware and grow your software and services business a little bit. And on that front, they have not made much progress.